looking at the chart, Bitcoin on the weekly time frame, um, it's very clear that we've had a clear rejection of key levels. So you see this high here, the price went above this previous high, took all of the liquidity, and now we're looking to close lower on the weekly time frame with higher volume, with increasing volume. So that's pretty bearish in the highs, but we have to see what happens now because we're still in the range. I think people will look at this and go, okay, we've had a clear rejection in the highs. Now what? What's the next plan? Do you buy? Do you accumulate, or do you wait for lower? And I think we are in a kind of key moment for Bitcoin because it's very possible that we go lower. If you look at how extended this price action is from the lows to the highs, we had a 216% increase in value. That's quite a run. But it has taken a long time to get there. I mean, it started in November. This green doji here, and it's come all the way through till this. That was November 22, and it's come all the way through till January 24. Yeah, so that's quite a run. Now, if this is the wave one, if this whole move is the wave one, then technically speaking, the correction can go as far as it wants as long as it doesn't make a new low. Technically speaking, there's no reason why it can't go down all the way to make a deep correction. When you look at this higher time frame price action, it would look very bearish if it went down past this area. But actually, when you look at the charts, that's the best place to buy. The best place to buy is definitely going to be a swing failure of this low here. That's the best place. And that would be about $23,500. That would be the best place to buy Bitcoin because you're coming into a key resistance area on the higher time frame, and you're taking liquidity from these lows, and you have the best risk to reward because you're catching the price at that pretty much all of the selling has been done by that point. And so yeah, that would be easily the best entry for Bitcoin without a shadow of a doubt. If anyone is looking to buy Bitcoin, that's where big orders will be placed. Right underneath this red wick here is, I think, the destination. Now, whether the price can get that far or not will certainly depend on how many limit orders are placed in the path of Bitcoin coming down. And it's all about supply and demand balance in the market. That's all it comes down to. And so obviously you're going to get aggressive shorts, and I think the lower the price gets, the more aggressive the shorting is going to become as people try to cover their positions, or they start shorting the market because there's a clear downtrend now. But fundamentally, we're still looking for some sort of ABC correction. If this is a 5 wave up in the wave 1, so we're looking at 1, 2, that's 1, 2, 3, 4, 5, something like that. This was like a really extended 5. Usually the 3s are the most bullish. So hold on, does that work? Let me have a look. The 3 can't be the shortest. It doesn't look like it's the shortest. Go down to that wick. This 2 doesn't actually go to this wick. That's part of the correction. It goes up to this wick here, or basically there, and then this goes down to there. That works. So you have a 3 that's slightly longer than the 1, and then you have this kind of extended 5, and part of that extension was to do with the hype train of these ETFs. Kind of like a disbelief rally, that 5 was. And I think a lot of people, as soon as we cleared this range with this kind of bullish impulsive candle, then I think it was just pushed up by people just leveraging, super leveraging long. And now at the tops we have a lot of FOMO, which has been keeping the price up. But we've obviously hit a key level. The key level that we've hit is not only is it a swing failure of this this previous pivot high, but also it was of this bull market range. It was the value, the point of control of the volume rate of this whole range in the previous bull market. So this is the bull market range, and we basically came in to take the liquidity and reject off this point of control, and that happened on the weekly time frame. So that's a clear rejection of that level. So we are now expecting some sort of ABC correction, and I think if I was to do a fib, a trend-based fib, yeah, I mean, it's overextended. Look, it's past the 1618, and then if you go to, say, the 2 to the 3 to the 4, it hasn't even managed to get to the 1.618. Let me see this one. The 3 to the 4. Looks like the 1-to-1. It's basically the 1-to-1 from this low to the 3 to the 4. You know, this whole move is a 1-to-1 from here to here to here to here. And I like the timings, actually. If you look at the timings, it looks quite symmetrical. This whole kind of pattern is quite symmetrical. So now I think I'm expecting some sort of ABC correction, and maybe that will be a similar timing. Like if I think about timings as well, let me see. I take it from, I'm not sure which low, but let me take from this one to this one to this one. Look, see, look, fib time, it comes to the 1-to-1 roughly. Oops. Let me see, get it to this one. So we're kind of in fib time on a 1-to-1 from this move to here, and then from this move to here. And basically it's from here to here, and then here to here is a 1-to-1. That's a 1-to-1. So this looks right. This kind of, this high looks correct. And I would expect some kind of higher low on the lower time frame. I'm going to have a look at that, and then that will be the place to short, because I think this whole structure looks pretty good. And so the next fib time is going to be basically the beginning of April. Look, the week of the 8th of April. So I would expect some sort of correction. Like, we have to see how this corrects, because are we going to get some sort of flat correction, and is it going to stay above this 236 like this, or are we going to, and I would expect the price to come back to this 236 at the very least, this higher time frame fib retracement. That would be the first key level on the fib, as far as fibs are concerned. Now, I haven't actually done it 100% accurately. Let me do that now. Let me just make this accurate, and then let me pull this to the low, and then in terms of the fib time as well, let me make that accurate too. Okay, so actually maybe next week is going to be the 1-to-1 on the fib time. So maybe the price goes up one more time for a short. We have to see how that plays out. And that would be, I think, if we are going to go up, I'll explain it in a minute. But as far as timing is concerned, we're on time. And I think any more upward move now would just, it wouldn't look right in terms of the rhythm and the rhythm of the way the price moves. If you see that, that looks very nice. This puts fib time actually look, it puts the 1618 on the 22nd of April, and that is the Bitcoin halving. It's at the last week of April. Do you see that? So there is a little bit of rhythm with the way the price is moving, and to all intents and purposes, there's no reason to think that the price doesn't go up when Bitcoin halves. I mean, historically, it always has. And the fact that this 1.618 on fib time lands perfectly on that week is a really key factor in determining how the price is going to move to that point. And so I'm expecting some sort of ABC. Now, like I said before, ABC, the depth of this can be, as long as we don't go underneath the 0, this is correct. And now obviously our target is this yellow line, which is the 1618. As long as it doesn't go underneath this level here, it can go all the way down, but it mustn't cross this level here, and that would be fine. And the flatter it corrects, I think, the higher the prices we're expecting, because then what you can do is you can do a trend-based fib extension. So if we have an ABC from this fib time, I'm just making this up. So just bear with me. If we have a flat correction, so it comes down to the 236, goes back up and comes back down to hit. If that's our correction, a flat correction, and we hold the 236 as support, and we land the C on time, then basically, as far as what you can say then is that then that is your 2. And so on the higher time frame, what you can do then is you can draw this to there as your 1. That's your 1. and then your 2 would be there, and then you would be going for a 3, and then a 4. Don't know how it would work. Looking at the timings, did you get the correction all the way there? Fine. I don't know how this is going to work, but I'm just going to make this up for the sake, just for this. I'm just putting those random levels there. But then what you could do is then you could say, let me just change this color. Let me change this color. Not that one. Again. So you have, excuse me. So you have your 5-wave up, right? Actually, the color is too similar to the correction, so let me just change it again. Sorry. Green. Let's just do green. Hi. So you have your 5-wave up, 0, 1, 2, 3, 4, 5. And that is your 1. So on this yellow one, I've drawn it as a 1. Now we're expecting some kind of 2. The 2 is going to be an ABC. And then you're going to have your expansive, the most bullish part of this price action is the 3. Then you're going to have another correction, which is a 4. The 4 is going to be an ABC, right? So this is going to be some sort of ABC. This 3 is going to be a 5-wave up. So from this 3 move, you're going to have 1, 2, 3, 4, like that. That's going to be a 5-wave up. And the last one is also going to be a 5-wave up. Like that. Now, I don't know how this is going to play out, but I'm just explaining to you that the bullish impulses are 5 waves. The corrective impulse, the corrections are 3 waves. And each bullish wave consists of a bullish 5-wave too also. And you can just take that and extrapolate that and apply that down in the different time frames. So every wave consists of 5, bullish wave consists of 5 waves, and then the wave one of that wave consists of 5 waves, and the wave one of that wave consists of 5 waves, and you just push it all the way down to the lowest time frame. And it's not easy to see, but it does happen that way. Now with the corrective waves, you can also get an A, B, C, D, E, but that's doesn't happen too often, so we won't go into that. So this is just so that you understand what I'm looking for in terms of the price action. I'm not expecting the price to just go up. I'm expecting waves. And so right now we're looking at this ABC flat correction. And then what you can do is you can take your trend-based fib tool and you can take it from the 0 to the 1, assuming that this is the 1, to where the 2 lands. So I'm assuming the 2 lands on the 236, and then we have targets. We have fib-based targets, and based on if we correct on an ABC flat to the 236, then I would expect the 3 possibly on a 1-to-1 to get to there, roughly $1,118. That would be the 1-to-1. So that will be the 1-to-1 on this trend of this 1, 2. That would be the 1-to-1. That would be correct. And obviously it doesn't have to go that far. It obviously could be much weaker. But then that 3 would be much smaller than this 1. And if that was to happen, so you have to see how far the 3 extends. The 4, because that's the 1, the 4 cannot come underneath the 1. That's the rules, right? And then you'd have a weak 5, because the 5 can't be longer than the 3. You'd have something like that, maybe, and possibly even weaker, possibly just like that, or even less like that. And then that's kind of what we're looking for potentially, if the 3 can only manage to get up to whatever this level is, which is the 618, based on this 2 going down to the 236. Okay, and then if you have a 1-to-1, you'll still possibly think, like I'm thinking to myself, well, sure, the 4 can technically come back to test this 1, but I think realistically you don't really want you want this high to offer support on the way back down. I think that would make sense. And so then you're looking at something like this, and then if you were to draw a Fibonacci retracement from this level to this level, that would basically be the 50%. You see it? It's the 50%. So the price would come back to the 50% to make the 4, and then the 5. Well, that's a 1-to-1. Really, the 3 can't be the shortest. So I guess you'll probably, it depends. You have to see if it goes a little bit more, a little bit less. If it's a little bit less, then 5 has to be less. If it's a little bit more, then the 5 can be more. So it will all depend on how far the 3 extends. But the 5, the length of the 5, whether it's shorter than the 3 or whether it's longer than the 3, will depend on whether the 3 is longer than the 1 or shorter than the 1. So this line will be very important, this 1-to-1 level, to see how far the 3 gets. If it gets low, if it comes lower than the 1-to-1, or if it comes higher than the 1-to-1, that will determine the 5. And obviously, you know, who knows, what if the 3 got up to the 1.618? I mean, potentially you're still looking for a deep 4 correction, but obviously this fib retracement would go up all the way to there, and then you're looking to correct back into this to the 618 instead of the 5, instead of the 50%. But if you have a massive 3 like that, you could potentially have a bigger 5. It's possible, but I think in the context of Bitcoin, I'm not necessarily expecting the 5 to go much farther past the 3. But who knows what can happen and how the price can correct. And this is all determined, there's a lot of lines, but this is all based on this flat, right? Now, let me delete that. Let me get rid of this trend based. Let's imagine if this correction is a little bit deeper. Let's say this goes down to the 382. The B goes up to backtest to 236, and the C comes much deeper, and it comes into the 5, into the 50%. Not as far as the 618, but let's say that's what happens. Who knows how this is going to play out? And then that would be your 2, right? And then you could do a trend base extension from there to there to there, so from the 0 to the 1 to the 2, and then you have different targets, because the targets are based on this correction now, on this trend from the 0 to the 1 to the 2. And so naturally you can see that your first target, the 618, would be at 55,000 roughly. The next target would be back at the all-time high. You see how the 786 comes back to the all-time high, and then your 1-to-1 would be thereabouts 87, and then if you extend all the way up to the 1.618, so naturally your targets are, so the 1-to-1 would be less. So depending on how deep we go now, depends on how far we're going to go in the future. But in terms of bullishness, usually deep corrections are more bullish. Usually deep corrections are more bullish. So possibly if we go deep, we'll possibly overextend. Possibly overextend. Now, I don't have all of the fib levels here, but usually what I will also do is have these two and have these as intermediary targets. It's possible for it to be like that, to go somewhere between these two levels, maybe up to the 1.414. And then I guess I'm still expecting, whatever happens, for whatever reason, I'm still expecting after we go to the 3 to come back to back test this all-time high. I don't know why, but I think once we clear the all-time high, I'm still expecting the price to come back, because usually you're going to get the latecomers and they're going to look to catch the retrace. This is going to be where the retail comes in, basically. Possibly this wave down here, they'll be looking to catch the 5 because they're the latecomers. And the 5 wave, the reason why the 5 wave isn't always bullish, because that's where the biggest take profits are taken for those people who are at the lows. They've seen the 3, they wait for the next correction, and then they look to take the rest of their profit. And so obviously we are looking for the 3 to be the biggest expansion, but it will depend on this next corrective phase. I think we're done with this wave 1 now, because it looks right. We've got the 5 waves. We've come into a key resistance level, which is the point of control, and we've taken the liquidity from this high. And in terms of timing, we are on time, so it looks correct in terms of fib time. Next week would be the 1-to-1 from the low here, so it looks quite good. So I think on the higher time frame we are now looking for a correction. So let me get rid of this. Great. Rename EW. Can hide all of that. And then let me zoom in a bit. Let me have a look at the candles actually. Obviously the monthly hasn't formed yet, but we have taken the liquidity from the previous month high. That's not a good sign. We've taken liquidity from that previous week high. We've got increasing volume on a potentially a bearish candle which ends today, and it closes under 50% of the body of the previous week's candle. It's a very bearish candle. After you see that candle, you're not looking to buy, you're looking for you're looking to sell. So we have to see how this what the sells, where how that pans out. Let me have a look at the 2-week candle. In a 2-week candle, you've got this kind of potentially, we have to see how it ends. Does it end tonight? Yeah. So you have take the liquidity. Yeah. So maybe in the next 2 weeks you could be expecting a red candle now. Look at that run. And you can actually see on the 2-week candles how the price is slowed down. It's like it's ready to turn. So look at the 3-day candles. Okay, so that closed 1.5 days ago. That's a full bearish reversal. And what's so bearish about this candle? Not only did we take the liquidity from the previous candle at the high, we closed underneath the previous candle wick, and we closed underneath this green candle open as well. You see that? So we've closed under some key levels. We've reversed the volume on this green candle and almost all the volume on this green candle. The volume's been reversed. So all of the work, the good work done by these two candles have been reversed. That's what this candle is suggesting. And the volumes come out, the volume's gone in, the volumes come out, and the price is lower. So none of these highs reflects the true price in terms of where the volume is at currently. And so right now on the 3-day chart, we're looking to back test this previous wick low, which look, it's coming perfectly. We're still underneath that candle open. And so, yeah, this looks like a bearish reversal. In the daily chart, well, that candle is disgusting for the bulls. Look at it. It's not nice at all. And again, it just confirms what we already can see in the other candles. This daily's come back to back test this, and it's confirmed it as resistance. And today, I think it's just giving the bulls one more chance to prove themselves, because what the bulls need to do is, in the first instance now, they need to close. I think for this to become bullish again, I think the bulls need to close 50% into this red body. This candle needs to close up there. Unless you see that, this is not bullish. There's no bullish reversal in this bearish reversal. And it has to be a close. It can't just be some sort of wick. So I think I'm looking for some sort of lower high, but not on the daily time frame, because the daily time frame is still bullish. That's the problem. Look, see, on the daily time frame, this is the higher high, this is the higher low. So actually on the daily time frame, we haven't confirmed a change of market structure. We actually need to go down here to make a lower low on the daily time frame, and then we can come back up to make a higher low, lower high on the daily time frame. We're trying to, so the bears are trying to make, basically the bears are trying to come underneath this level here. That would go from a higher high to a lower low, higher high, lower low. That will be the first step into changing market structure from bullish to bearish. And I think that's what we're seeing right now. And as you go back in time, I mean, if you go to the lower time frames, you can see that it's already happened. So on the 4-hour chart, you can see that this was a higher low. That was a higher high. This was a higher low. That was a higher high. We've made our lower low. This is the lower low now. And so what we're looking to do now is to make a lower high. Yeah. And the way to know if we have a lower high is if we make another lower low. We keep on making lower lows. Now, this doesn't look like a lower high to me. So I would expect some kind of come up first. I would, but you never know. It all depends on people. We're held by the 236. I mean, I think I would expect it to come up a little bit. This would be your best entry, the golden pocket, but that's really looking bullish if it gets up there. And then let me do a volume. So let me do it from this candle here. I think the 382, if it could get up that far into the point of control, would probably be the safest place to short. Probably, if you're looking to short, make that lower high. You've got a high volume node, you're into the top of the value area, you're coming into a fib retracement level from this high to this low. because you're not expecting, I don't think I'm expecting it to go up all the way up there. That doesn't make any sense. I don't expect us, now that we're changing the trends, I don't expect us, yeah, that would look weird, because then you'd be going back above the value area high. That would look really bullish. And it'd be very difficult to short that. You'd almost expect, we got up there, you almost expect the price to at the very least go and take the highs one more time. It wouldn't be weakness for the price to get up there. That would be quite strong. So I think maybe you would be looking for some kind of, you couldn't just short this in the lows. You're looking to short a pullback into a key level. And so in my mind, that would probably be the area of interest. Yeah, you'd just be looking to take out the lows for the first instance and then much lower, potentially. And that would be trying to trade a lower high. And alternatively, if that fails, then possibly going up and not succeeding to capture that value area high could be a second attempt at shorting. Something like that. But I think it depends on how bearish we are. It depends on how many people are looking to short, because obviously the more people that are looking to short, the harder it is going to be for the price to come in past that 382. I mean, it's already struggling to get past the 236. I don't know if at the weekly open tonight the price is just going to mark itself. I have no idea. You can't predict that. I would never do that. I would always wait for some kind of retracement into a key level. Even if the price went down, I would look for a retracement to short. I wouldn't just short. So if for some reason the price does go down at weekly close, then probably you'll be looking to take out all of these lows, see where it ends up, and then just pull the fib down. Maybe it went up, maybe it goes down to there, and then you end up shorting the value area low if there's a reaction, you know, if there's a reaction. If that's what you're looking to do. I think it's a lot safer to short in the up here than down here. It's a lot safer to short into the point of control than back into the value area low, because for whatever reason this could go up. So I think that was something that I would probably be looking for, just to try and get one more attempt back into that area, and not manage to do that. And that would make sense, I think. We're looking at the daily to come back up to possibly try and come up to this wick here, or maybe this level here. Get people bullish before it dumps again. You know, that's how the price works on Bitcoin. It's very it does the opposite. So at the very least, if you're shorting there, you're shorting at the top of the range. You know, you're not in the middle of the range. You're waiting for the price to come up to short, and then you'd obviously look to take profit at in the initial move down. It would be the value area low. It would be at the bottom of the range, because you just don't know. The other thing about the price is we don't know if we're just going to range for the next few months. People are getting bearish, but we don't know what's underneath here. We don't know if there's billions and billions of dollars worth of orders here. We just don't know. We don't know if this is just going to do this, you know, like, and just do this. We just don't know for the next few months, next couple of months. No one can predict the price action. So that's why you have to take profit. But I think on the higher time frame, I don't know if I would long unless I saw like a swing failure pattern. Probably it's hard because there's 3 lows that the price could swing failure off, and which one do you take? There's one there. There's one there. These are pretty much the same, but and then you have to take profit fast. You have, you don't assume just because of the momentum is turning, you don't assume that the price is going to swing failure and then go up. It could just do this and then just continue going down. So usually when people take swing failure trades, they will take their profit quite quickly. Once they're in profit, they will take their profit, so that if it does do that and they do get stopped out, they don't lose on that trade. They still make money because they've already taken their profit. So you have to take enough profit to cover the loss if you get stopped out. If that's what's happened, that's how it's done. So you have to be wary of that, because it could just go through and aim for the next level, and it's hard to find other forms of confluence, because where's the next pivot? Well, maybe this low here. The golden pocket is much lower. That's really where you want it to enter, the golden pocket. So I don't know, I think it's more of a scalp. I think the shorts are probably, based on the candle formations that I'm seeing now, I think the shorts are probably going to be the safest trade. And probably what you're looking at is when the weekly closes now, if we don't get, I don't know where the weekly is going to close. Maybe it closes down here or lower, who knows. But basically, I think you'd be looking for a 50% retrace of the body to short. So wherever this is to there, probably the price to just retrace up to the 50% to go back down. Like, I wouldn't expect it to go up all the way, but I mean, it might. You see, at the moment, you have a untouched weekly level, which is being formed. So when the week closes today, you'll have a new liquidity level formed, and it will be here. You can mark that out. That's your weekly level. That's your liquidity level now. So it's a new strong level. And it'd be very unlikely that the price goes up to that level. But I mean, it could happen. But you're going to have a lot of liquidity there to go back down. A lot of people are looking to exit now. And that's why these points of control are so important, because there's a lot of trapped longs looking to exit. Yeah. A lot of trapped longs. So, I mean, I think if a lot of people, like if you're not leveraged and you're not already liquidated, on this range, the point of control shows you the price at where most of the volume is. So most of the volume is above us now at 48272, roughly in that area. And so I think a lot of people now will be looking to exit their positions and wait for either lower or possibly higher, because they want to see lower prices, or they want to see so they can enter lower and scale in lower, or they're looking for a sign of strength. That's what you're looking for, lower or signs of strength. And right now we've just experienced a massive sign of weakness. Yeah. So unless you see a massive sign of strength now, like you're not going to be in a long. You're going to look to exit your longs. And because most of the volume is here, then it's anyone who's in a long now and is underwater, trapped longs, will be looking to sell to break even. And that's why that's the best place to enter a short, because you're also you're basically trading in the same direction as trapped longs looking to close their positions. And so it is very also, it's also possible that people have bought the dip and now their break even is somewhere here, you know, somewhere there, and they've overpositioned. They're not looking to wait to try and make money off this trade. They'll be looking to exit and then reevaluate, and the reevaluation is going to be if the price shows strength and it does come back up, closes up, and it back tests and it holds a support. That's your strength, and then you can just enter long again. You can reposition in, and you're not taking the risk, and you have this key level underneath you, the point of control, which again in reverse will act as support, because you have the same situation but in reverse, where you have trap shorts who are now underwater, who are looking to get out in reverse at the point of control. And that's why the point of control is so powerful, because it allows people who are trapped to exit at break even if they go underwater. So that's why it's so powerful, and that's why that's how you can use the point of control as a reference for when you're entering and exiting your trades. Not just the point of control though, like you can also use high volume nodes, especially when they line up with significant levels of confluence, such as higher time frame fib levels and obviously swing failure liquidity levels. So I think if we can get a pullback up, a short would probably be the best plan. Otherwise, I think, as I explained earlier, I'd probably be looking for this 236, possibly for the first support. I don't know if we're going to form a flat or not. I do imagine that on the higher time frame, if someone is looking now to position into Bitcoin, that they're going to be looking to enter at these higher time frame fib levels. And I mean, that's a strategy. People will break down their entry into portions and they'll be looking to enter on the fib level. So it might be like 10% on the first fib, 20% on the second one, 30%, you know, who knows? And they'll just keep on positioning in. And so, and they'll be looking to do that. People enter differently. So I don't want to say that's how they're going to do it, but you're going to get people look at these major fib levels and they will look to enter on spot. And if you want to trade, then I think if the price does start to work its way down, then in my mind, I'd be looking for previous ranges. So this is a previous range. And obviously see here, the value area high corresponds with the 236 on the higher time frame. So you could potentially get some kind of bounce there. But then you have to take profit. And so if you do get a bounce there, you can do a fib retracement all the way down to there. And could it bounce all the way back up to the golden pocket? I really doubt it, because I think one thing I know about Bitcoin is when people sell, they really sell. They go for it. The price just goes down. So I think probably you'll be looking for the 236 or the 382. The 382 would correspond with this value area low if the price got down there. So probably that would probably be the first place to short again, probably. Who knows? But I think there'll probably be a bounce here in this mini range. But what will happen is, depending on how fast the price comes down, obviously you don't catch a falling knife. And so it's the same thing with longs. Longs aren't going to be coming in until the price settles down. They're not going to be just jumping in, hoping for the best, because, you know, the price could just go through that level. And if it does, it'll probably bounce on this point of control here, go back up to back test, and then you're looking for a short on the back test of that, because that will be the value area high of this previous range, and the 236 on the back test, because we've just gone through it, and it'll be quite a violent drop. And then obviously you're looking at the next levels, the 386. In my mind, the 386 is going to be the first significant area of interest for me, because it's clearly an SR flip. If you look at the price here, if you look at the price here, it clearly showed resistance. And so I would expect, I don't expect it to just go through. Let me see if that lines up with some kind of fib retracement to here, roughly. It does, see, it comes, it's like the golden pocket as well. It might come through a little bit, but then we might get some kind of a mini relief rally. And maybe that's where the price comes to form the A, and then we might see a B. We don't know how long that's going to take either. But I am expecting the C to kind of land somewhere where this fib time is, which is somewhere in the 3rd week of April. So maybe we do come down to this 382, into this golden pocket, into this SR flip to form an A. And then maybe this will go back up to back test this range here, clear out the late shorts, and then you're going to have, and then this, I don't know, this one, could it be back into the same level just to take the liquidity here, just to go up, or could it be much deeper? I don't know. Or could it be much more flatter? I don't know. Can't really predict these things. I think the bullish, if it was bullish, it would be much flatter after you get one deep correction like that, or back test of that. Then you'd be looking for a higher low. And so maybe if it went up to that value area low here, the B went up to that high, and then if we're really bullish here, maybe then you'll be looking for like a golden pocket from here to where the A formed to where the B ended up. So you'll probably be looking for a higher low somewhere here, and you see that corresponds with this point of control in this mini range here. See that? And there's a lot of lines. Let me just get rid of them. So there are some options of what could happen in this correction, but I think it's going to be in accordance to fib. It always usually is. So, you know, draw your fibs and see what happens. What time is it? It's 1:12. All right. Are there any questions? I know that there's a few watching. Does anyone have any questions? Feel free to type. I'm looking at the chat. No questions. That's good. If there's no questions, it means I've done a good job. So I think I'm looking for a short. And then what I will do, I'll show you, is I'll just draw a line here, the point of control, rename it to point of control. Oh my God, I've lost it. There it is. I'll bring it down a little bit because I want it to activate before it hits the level, and I'll set an alert. You have to write what you want to do. Price coming into P, look for shorts. So there's no confusion, because you're going to get this alert and you'll be like, oh no, what was this alert for? Because I can't remember. And then I won't even look at this chart, because at the moment I'm not looking for longs. You could put an alert on these lows. Actually, I will. Don't really want to long this low, to be honest with you. Maybe this one or this one. Maybe this lowest one. No, I'll put it on the earlier one. The earlier. Possible SFP. Can't spell. Look at price action. So I've got a couple of alerts. I'm not going to even look at this chart now. And that's it. So let me have a look at TRVL. I'm not going to go long into this because I've got to go. But basically, what are we experiencing here? Let me tell you. The weekly close is going to be quite important, right? And even though this may or may not look bearish, it's still not bearish. So don't think that this is bearish. Yeah, it may look bearish, but it's not bearish. And I'll explain why. First and foremost, we have increasing volume. We're not in the highs, we're in the lows. That's the context is very important. If this was in the highs, if we'd had an extended rally like this, like Bitcoin, and we get this kind of candle and it's in the highs, you know, and we had high volume there, then I'd be thinking bearish. But we're in the lows, we're not in the highs. Look at the range. We're from the distance from where we are now to the all-time low is only 47% below us. It's only 40% below us. It's not much. We're in the lows. So I think positioning of the price with respect to the whole chart is very important when you're evaluating these candles. If this was on the extended run of like Bitcoin, when I'm looking at Bitcoin and I'm looking at, oh my God, let me get rid of all of that. Like a candle, inverse candle like that, increasing volume into the highs of an extended run. Okay, that's bearish. That's definitely bearish, right? But I'm not seeing that with this, with TRVL. People did sell. That's a fact. A lot of people sold. And I don't blame them for selling. I don't blame anyone for selling. For most people, you know, with small positions, going up I mean, actually, a lot of people were in from lower because I've been telling everyone from back in, whenever, I've been telling everyone from the all-time low that TRVL is good. So from all the way down here, if you look on my Twitter and then on YouTube from the beginning of December, when it was here, I've been telling people that TRVL is good. So sure, if you made a 2x on your investment, I don't blame you for selling, you know, it makes sense. And you're going to get this kind of price action and this kind of behavior at the lows, because for a lot of people going from 3 cents or from 2 cents to 9 cents is significant. The way the price moved now from 3 cents to 9 cents would be like going from $1 to $3. Yeah. And so going from $1 is here, that's $1. It'd be like from going from here all the way to here. You see? That's the same. And so obviously at the lows, you're going to get more volatile behavior. The higher we go, the less volatile it becomes, because the distance it has to move to achieve the same percentages in terms of X is going to have to be more. And so obviously, as the price moves smaller distances, people are going to be in multiple X's quicker. And so therefore they're going to take their profit and sell. And obviously we're in a it's much more illiquid at these lows because there's less trading, because a lot of people are hodling. They're not looking to exit. The timing is wrong as well for a lot of people. Like for me, I didn't sell. I could have sold. I could have even taken profit. I didn't take profit because I'm hodling. I'm hodling because for me, the timing is all wrong. I'm not about to take profit or exit at the beginning of the bull market. I've been waiting for since November 21 or November 22 when it first launched. I'm not going to exit now. That doesn't make any sense. I'm not going to sell now. This is the time to buy. This is not the time to sell. So I accept that people are willing to take profit and they may not even enter back into the project. And I think that would be a massive mistake. But in my mind, we're at the beginning. So I'm not going to sell now. And what needed to happen happened. And what needed to happen was an increase in volume, right? So we had an increase in volume. And this is Gates. So actually what I want to do is quickly show you KuCoin, because KuCoin really tells a story, gives a better story. It gives a better picture. I said that we were in the consolidation range and an accumulation range. Yeah. So let me just draw it out for you, which is there. I said it was bullish, and I said that this candle wasn't bearish, and it wasn't, because these wicks above these candles are market buys. Yeah, so you had this high, people were like bearish with this candle, and I said it wasn't bearish, and it wasn't. Look, it wasn't bearish. Okay, it could have been bearish, and I said, if you're bearish, now is the time, because you have a bearish candle. You have a high volume bearish candle. The price has gone up, taken the liquidity, it's back in the range. Now is the opportunity to sell if that's what you want to do. But obviously it didn't happen. And we had this kind of explosion, this breakout, so to speak. Yeah. Well, this is still a breakout. You have increase in volume up, and we broke this range. You see, we've broken this range. This is a breakout. Now, not all breakouts kind of break out. You know, sometimes you have a breakout, but you still need to test the breakout. You need to test. And what people are saying is, like, they're looking at the volume and they're going, wow, look at all those people who sold. Look at this red candle, the volume in this red candle. That's 43.9 million in this red candle. And then today's candle so far, we're looking at 4.2 million. And then the green candle, we're looking at 21 million. So basically, when you look at is it the 3-day or the weekly chart? The weekly chart, 75.875 million. Oh my God. Look at that green candle. Look at that candle. That's a crazy increase in volume. That's off the charts. Is that the most volume we've had? Yeah, look, we've had the most volume ever in a week on KuCoin. Yeah. Before that, it was 72.779, and that was all the way back on the week of the 18th of April. And now we've had 75.875 million. That's more volume in this candle than there is in circulation, because as I've said before, most of the coins are locked up in the community treasury and the marketing fund, the growth fund, whatever it is, which belongs to the DAO. There aren't that many coins. This is more than the coins in circulation has been traded in this last week. And we've exploded outside of this consolidation range. See that? And even though we have X amount, so many people who have sold, a lot of people sold, and I don't blame them for selling, you know, I didn't sell, but I don't blame people for selling. All of the people who sold have, that price has been bought. You got to look at it the other way around. Just if these people had sold and the price was here, right, that would be a completely different story. We'd be having a completely different conversation if we had 44 million of sales and the price was now underneath this range. Yeah, this is telling me that all of these people sold and we're above the range. We're still above the range. That means that all of those sales were bought. So even though this is a sell candle, it's telling us that the price has been bought above the range. This price is good. This volume is telling me that this price is the floor, is good, because someone is looking to buy so many of these tokens at these prices, and the price is holding. Now, obviously the week candle hasn't closed, so I can't predict how it's going to close by the end of the week, and obviously I don't want it to close back into the range, but who can predict the future? No one can. But at the moment we have a decreasing volume. These green candles are higher, increasing volume. The red candle decreasing volumes. You know, we had this. We have to see how this plays out. You know, at the moment we're holding support, and actually the level that I don't want us to lose, in my mind, the key level is this one. In my mind, this is the level that I don't want to lose on the weekly time frame. Is this one, this weekly level? Is that the one? No, I think that's the one. This one here. That's the one. We change it to yellow. Let me zoom in. You see how on the lower time frame price action, you see how many times this level was resistance. You see that? Resistance. It didn't, the price couldn't get above it there. Here the price couldn't get above it. Resistance. I don't really want to, I think as long as the price holds this level, I think we're good, because for me that would be an SR flip. Yeah, that's what I'm looking at now, an SR flip, a support resistance flip. And it's not unhealthy. Like, I think people are looking at other coins and they're going, why hasn't the pump continued? This is bearish. This is not bearish. This is actually bullish. It's bullish if we're coming back to retest levels that we've broken, to confirm broken levels as support. If and when the price comes back here and confirms this as a flip, that's ultra bullish. That's so bullish. It's unbelievably bullish, because that's what you want. You want to see increasing volume, and you want to see previous price levels back tested as resistance to support flips. If that's what we're experiencing, that's great. That's good news. That's what you want to see. Okay, that's the first step in changing the path. And the increase in volume, I don't know who it was, but whoever it was, if you're watching my videos, I thank you, sir, because you did us a great favor. Whoever brought this up is a saint, and you will be well rewarded, because you're on a winner. You're onto a winner. This Dtravel, this TRVL is a winner, and you're going to be well rewarded, because I'm expecting much higher than people imagine. Obviously, we won't know until it does happen, but you know, you'll be well rewarded. Anyway, this is increasing volume. The price has been sold more volume and the price is still higher. So in my mind, this is bullish. This isn't bearish. And I think on the weekly time frame, I'm not going to preempt the future because I don't know. I would like the price. I think obviously with these candles, it's very hard to know exactly which level is correct. But I don't know. I think it would be nice for the price to close above the previous week high. I think that would be nice. Let's see. This increasing volume is off the charts. Thank you. And we're still above the point of control. That's bullish. And as long as we're above the point of control, that's bullish. And what I expect, and this is what people don't realize, this wick that's gone up all the way into the 9 cent mark, into the value area high, that's the first test of 9 cents that we've had since. We haven't really tested 9 cents apart from this back test here in March, on the week of the 13th of March. That was the first back test. We tested it as support on the 27th of Feb, but it didn't hold. And then we back tested it as resistance. This is the second resistance back test we've had of this 9 cents mark. This 9 cents level is key because it's the launch price of the token. And so in my mind, anything that is acquired underneath the launch price is discount because the price launched at 9 cents. Yeah. And in the future, once the price gets above 9 cents, I don't expect it to ever come back down under the 9 cents. That would be very strange for the price in the future to come back down below the launch price. That would be very strange. Okay. There'd be something very wrong if that was to happen. So I am expecting in the future for 9 cents to hold and flip as an SR flip. And this is the first test. And we've gone all the way up to 9 cents. And what we've actually done is we've cleared all of the liquidity up to 9 cents. All of this liquidity has been cleared now. So someone has purchased the price and cleared all the liquidity for us. And that's great because it means the next time we go up, I don't know when it's going to happen, there's going to be significantly less resistance. Significantly less resistance. A lot less people are going to sell because all of those people who sold all the way up to 9 cents. And so the next time it goes up, there's going to be significantly less resistance, less liquidity because it's been taken. And to fill a big order like that, someone had to clear it all the way up to 9 cents. Yeah. And they've got it. One person, two people, I don't know how many people it was, have collected a massive bag, huge bags, and they're still in the lows. And their average is probably somewhere about 5 cents or whatever. It doesn't really matter because ultimately we're going way above. This is not the high. This is the lows, and we're going much higher. This is amazing. This is a massive sign of strength in my mind because look at the volume. And this is what I wanted. I wanted increasing volume. And this is the first sign of increasing volume. And we have been having increasing volume. But this is like the first injection of great volume, and we're going to have more. I think this is the sign of things to come. What people don't understand is that this is the beginning and no one really knows or has discovered Dtravel or TRVL. And I think a key moment is going to be the release of the search engine. Once the search engine is launched, any person in the world will be able to go and book accommodation on Dtravel. And everyone in crypto, when they look at Dtravel, will be able to go and have a look at that search engine and see all the different properties. It's going to be very attractive for people to see that, and then they're going to understand. And so that's happening very soon. That's going to happen probably in the next 5 to 6 weeks. There's going to be a crazy big launch with a lot of marketing. And so there's no way I'm going to sell before that happens. That's ridiculous. Why would I do that? That's mental. In fact, I'm buying. I'm waiting for this week to close, and then I'm going to buy. As soon as this week candle closes, I'm going to go onto whatever exchange, probably Bybit, because that's what I use. I'm going to mark it buy. That's what I'm going to do. And because it's a red candle, it's a red weekly candle. I buy red weekly candles. That's what I do. I regularly, without, oh, sorry, not weekly, daily candles. Sorry. I buy red daily candles. Yeah. I always buy the red candles. That's the best entry you'll ever get in a bull market. When you get red daily candles, you can just keep on scaling in and you'll always catch the lows. If you look at all of these red candles from the all-time low, if you bought the red candles, you know, you're always buying the bottom and you end up with the best average, you know. On average, you always end up with the best average because you're buying the red candles. And also you're not buying the pump. So if you think about all of these red candles, if you're averaging in, yeah, you buy the red candles. And if you want to be more risk adverse, obviously you could wait for the red weekly candles, but sometimes with the red weekly candles, you have to be waiting a long time. And because we're in the lows, I think it's just good to buy more often. Like you could have bought these from the all-time low. That was 1, 2, 3, 4. You'd have 5 entries. Your average would probably be somewhere around here if you were buying just the red weekly candles, you know. So it depends how you play it. But I think for the duration of the bull run, I think it's a good strategy to just buy red candles. So when the candle closes on a higher time frame, like the daily, maybe the 3-day, depending on how your strategy is for entering, or the weekly, whatever you like. But I think it's good to just buy red candles. But also, if you don't want to if you want better entries, then I would suggest set limit orders underneath the wicks. See all these wicks? The problem with putting orders underneath wicks is you might not fill. But like even yesterday, we had this red candle here. Where do you want to enter? Well, underneath the wick. That's where you should enter. That's the best entry. And actually that would be the best entry because you would be above this weekly level. So if you want to place limit orders, that's where you place your limit orders, under the wicks. And if you want to put in reverse, if you want to put limit orders in reverse, then the best place to put them is in the same spirit of the idea. It would be above the wicks, you know. So I'm not just telling you to buy. I mean, if you want to sell, then that would be the best place to sell, above the wicks. So yeah, so I don't really want to go much more into Dtravel and TRVL because I think it's still looking good as long as we hold this weekly level. Let me give you the price so you understand what level I'm looking at. It's on KuCoin, it's 3384. So I think that would be fine. And if we could hold above the previous week high, that's 3499. I think that would be better. But I don't think it would be terrible to close above the weekly level. I just think whatever happens, we have to test. Like we may, and I want people to be prepared for this, we may have to go and test this level on a weekly time frame. Yeah. So I don't know what that means to the price. I obviously, I can't predict the future, but sometimes maybe, you know, like in the same way we had this little consolidation range here, maybe we need a little consolidation here before we go up. But usually what I think when I see these candles with these wicks, the wicks fill. especially when you're on support. You know, I think there's a lot of interest in this token right now, and when the market was going down, TRVL was up 100%. It was all over Twitter. KuCoin was pump. It was on the pump news, whatever. A lot of people found interest in this token, and now a lot of people are doing their research and they're going, wow, this is a hidden gem. It's got a low market cap. This could do really well. And they're right. This is going to do really well for reasons that they may not know. And one of those reasons are the tokenomics. So if you don't know, the tokenomics are changing, and the team are going to propose a new tokenomics document probably tomorrow. I'm not sure if it's going to be tomorrow, but probably tomorrow or Tuesday, or basically this week. And they're going to propose some ideas for the community, for the DAO to discuss. And it's a discussion. It's a public discussion. It's a village, town square. Everyone has the right and the permission to give their opinion and to comment and to join in with this discussion. And that's the power of DAOs. And that's the power of what Dtravel is going to become. It's going to become a community initiative. And so everyone who's involved, everyone who's a token holder has the right to participate, and everyone's views are going to be taken into heard and listened to. And the team are going to bash out their ideas, and then we'll have the opportunity to comment. And whether it's critique or whether it's to praise, it doesn't matter. What matters is that we're engaging. And I think, like, I've been thinking about tokenomics a lot. I've been pushing for the change in tokenomics for a while now, and it's happening. So for me, I have an idea of what I want, but, you know, we all have ideas and we have to bash them out. We have to discuss them. For me, the most important thing about the tokenomics is three things. First and foremost, it has to be very easy to understand. Very easy. I think if you want people to invest their money, they have to understand the tokenomics. They have to understand it without difficult explanations. I think that's a priority, actually. I think if people find it difficult to understand, or if I find it difficult to explain, then people will find it difficult to understand. If people find it difficult to understand, there's no way that they're going to invest. And I think that's literally priority number one. It has to be easy to understand. If it's easy to understand, it's going to be easy to market. If it's easy to market, then the marketing is going to be a job well done. So I think priority number one for me is that the tokenomics are very easy to understand. If I look at the tokenomics and I don't understand it in the first instance, then I think that that's a failure. And I would write it out immediately. I think sometimes we can make things too complicated. And I think when it comes to crypto, when it comes to tokenomics, when it comes to ideas, we have to keep them very simple, because that's what we're trying to do. We're trying to attract the masses. And on the most part, people prefer it simple. They prefer simple explanations. They don't want complicated. So I think the tokenomics has to be simple, has to be easy to understand. Number one. I think number two, the tokenomics must be store of value. I think that is the backbone of a successful Web3 crypto project. Store of value. I think every project has their kind of fancy utility, whatever, but ultimately in a world where inflation is going up, the number one thing that's on people's minds is how to retain their wealth, how to retain their value. And when prices are going up and where countries have triple-digit, double-digit inflation, the number one thing that's on people's mind is how to preserve their value, how to preserve their wealth. And There is no way that someone is going to come and sell other assets, cars, properties, tokens, Bitcoin, whatever, into and invest it into our token if they don't also believe that the token has store of value. It's really important. So we have to, the tokenomics must demonstrate in a very easy way for people to understand store of value. Very important. Yeah, everything else can be put on top of that idea, but store of value must come first. I think when you have the store of value idea, it's a very easy narrative for people to understand, because Bitcoin had, you know, Bitcoin, when it first launched, it wasn't store of value, it was digital transactions. And then they realized that it sucks. Bitcoin sucks for digital transactions. It's too slow, it's too costly. So they had to change their story. They had to change the narrative. And actually, they did a good job because they changed it to store of value. And we can do the same thing. Why not? You know, before Facebook, there was MySpace. It isn't just because it exists doesn't mean you can't come and do something better. Okay, especially when Bitcoin is going through the roof and it's really expensive and people are looking for a way to store their value. They may go, well, why would I buy 1 Bitcoin when I can buy 1,000 TRVL and still achieve the same thing, which is store of value? Okay, so I think that's number 2 for me, is store of value. And I think number 3 for me, the most important thing is going to be the way the staking is done and how to grow your value. But I think that's going to be the last on the list, because I think that's going to be intertwined to store of value. I have a few ideas about how they can achieve that, but I think on the most part what they're suggesting will work, but I think it can only work with the store of value idea. If that has to get, we have to get that right first. And the great thing about staking to increase value is that that will lock up tokens. So when you stake tokens, you lock it up, so you take it out of circulation. And also when you stake tokens, when you're increasing that demand for staking tokens to increase value, people are then going to buy the tokens, which is going to increase demand for the tokens. And that's primarily where the value, the demand is going to come. In the demand is going to come because people are then going to buy tokens to stake tokens. Now, how do you reward the stakers? Well, that is a conversation that we're going to have. And that's what the tokenomics document is going to suggest. And that's what we're going to discover this week on how, where the value is going to come to reward the stakers. That's a whole different discussion. And I think that's going to be a very interesting discussion, because there's lots of ideas of how to achieve that. But primarily it has to come on the back of store of value, and it has to be simple to understand. If you get those first 2 things right, then the third thing will fit in very nicely. And that's it. And when you want to innovate something, you don't need to go crazy. You just need to innovate 1 or 2 things, you know. When I think about innovation, I think about Apple computers. They invented their own operating system, but it failed. And so when they reinvented themselves, they basically took Linux and they they called it Apple, you know. But the operating system of Apple is a Linux-based operating system. They took something that already worked, was secure, free, successful, and they made it their own. And there's many examples of that in history where the innovation wasn't taking an idea and making it complicated. It was just basically rebranding it or remarketing it. And I think we have to make sure that we don't make the tokenomics too complicated so people can understand. All right. I think that's it for today. I hope that was interesting. And yeah, let's see what happens here. This is KuCoin. So we're in the, you know, we're in the value area. This is a new range that we're forming now. We are in the lows. So let's see if this point of control actually comes, we get a little bit more volume at these lows and this point of control moves down to here. That's the first indication of a bullish reversal that I'm looking for. Let me have a look on Gate, because I've been charting on Gate a lot recently to see what that looks like. Oh, you see, look, Gate, the value area, the point of control is much higher. See, Gate, but because most of the volume was on KuCoin, you see, we have look at this. We have decreasing volume. Apart from this red candle, we have decreasing volume. So that's kind of what you want to see. On the way down, you want decreasing volume. That's not a bad sign. You want decreasing volume when the price comes down. Let me see on KuCoin what the volume is like. I mean, it looks like, obviously there was increasing volume here, but then on the most part, it is decreasing volume. So let's see what happens. I think this is fine. It doesn't look terrible. Not yet. But we'll see. Let me have a look at Bybit. So it looks like the point of control on Bybit and Gate are roughly in the same area. It looks like that big buy was on KuCoin. That's what it looks like to me. And I think we're in the range. The range is here. We're at the bottom of the range at the moment. So let's see how that plays out. Let me have a look at MEX as well and see what that's looking like. Get rid of these. So look, so on MEX, the point of control is much lower. On the other two exchanges, it's a bit higher though. So I think we might end up with maybe something similar, you know, maybe, let's see, maybe another tight range. I don't know. But look how tight that was. It got really tight and then it exploded. And I think once we kind of confirm support, and I think that's what people want to see. I think people want to see that this structure is now supporting the price. And then we're going to start moving up, you know. I think that's when people are going to get the confidence to buy more. And we have increasing volume. Look at this on MEX. The red candle had more volume than the green candle, yet the price is still higher than when it first began. So, I mean, I honestly think it's crazy how people sold. But now let's see if those people reaccumulate, because surely now they can accumulate more than they sold. Because actually this is looking really bullish. This isn't looking bearish at all. We're just coming back in to test a support range. And it looks like it wants to hold. It looks like, doesn't look terrible to me. Look, we're getting some kind of accumulation again. It looks like reaccumulation. That's what I always say. Reaccumulation now. All right. Have a wonderful Sunday, and I'll speak to you tomorrow. Turn this off.